Welcome back to Explain the Charts, where we provide in-depth analysis to help you make informed trading decisions. Today, August 5th, 2025, we're diving deep into BTCUSD, dissecting both the latest news and technical chart data. Our journey begins with the current market narrative impacting Bitcoin's trajectory. Recent reports clearly indicate that both Bitcoin and Ether are experiencing a significant rebound, a strong move against the backdrop of ongoing U.S. economic uncertainty. This particular market behavior often signals a renewed risk-on sentiment among institutional and retail investors alike, suggesting they are willing to take on more risk for potential higher rewards. Looking at our daily chart for BTCUSD, stretching back several months, you can clearly observe the overarching bullish trend that has been firmly in place, consistently pushing prices higher. This long-term upward trajectory is a testament to Bitcoin's growing adoption and its role as a key digital asset in the global financial landscape. However, even the most robust uptrends are punctuated by periods of price correction or consolidation, and Bitcoin's recent performance is no exception to this natural market rhythm. A profoundly significant piece of news bolstering the bullish case is the unprecedented profitability achieved by Bitcoin miners in July 2025. They hit a remarkable $57,400 in daily revenue per exahash, marking the highest profitability recorded since the pivotal April 2024 halving event. This surge in miner profitability is a critical fundamental indicator, demonstrating the underlying network's health, security, and economic viability, which is inherently positive for Bitcoin's value proposition. Despite this strong fundamental tailwind, the market has recently been impacted by substantial headwinds in the form of U.S. spot Bitcoin ETF net outflows. A staggering -$812 million outflow was recorded on a single day, an event that stands as the second-largest daily outflow ever, causing understandable jitters among market participants. You can directly correlate this significant outflow pressure with the pronounced larger red candles that appeared on the daily chart in late July and early August, where selling volumes spiked considerably. This clearly illustrates how institutional sentiment, reflected in ETF flows, can swiftly translate into visible price action and market corrections. Yet, from a more macro perspective, the trading firm QSP Capital injects a dose of optimism, emphasizing that Bitcoin's July monthly close was, in fact, its highest in history. This record monthly close strongly suggests that the recent price drawdown should be viewed as a healthy and necessary correction within a larger uptrend, rather than a sign of outright capitulation. It's a classic battle playing out right before our eyes, short-term fear and profit-taking clashing with underlying long-term fundamental strength and accumulating positive historical data. Now, let's transition and zoom into the one-hour chart to meticulously examine Bitcoin's very recent price action and discern the immediate market dynamics following the broader daily movements. On this more focused time frame, we can observe precisely how the price has navigated the turbulence and attempts to stabilize after the significant ETF-driven dip. Current news reports indicate that Bitcoin's immediate bullish target is a formidable key liquidity wall strategically placed near $116,000. Specifically, order book data reveals a substantial wall of asks centered around $115,800, representing a concentrated area of supply where sellers are poised to offload their holdings. You can clearly witness on this hourly chart how each attempt by the price to breach or sustain above this $115,800 level has met with strong selling pressure, confirming its robust nature as a short-term resistance ceiling. A decisive break and a sustained hourly close above $115,850, ideally backed by a surge in buying volume, would constitute a potent bullish signal. Such a move would align with analyst Big Mike 7335's perspective that the $112,000 area has indeed proven to be a reliable and established bottom for this correction. Conversely, should the price fail to conquer this resistance, several crucial support levels are laid out beneath, starting from $113,800 down to $112,000. The most significant line in the sand for bears, acting as a historical psychological and technical stronghold, remains around the old all-time highs near the $110,000 mark. This $110,000 level would need to hold firm should market pressure intensify and bears manage to push the price lower. Furthermore, the recent complete filling of the daily CME gap, a well-known phenomenon, acted precisely as a classic price magnet, drawing the price back to close that void. The market's subsequent reaction around these newly confirmed supports and resistances following the gap fill will be absolutely crucial for projecting Bitcoin's next major directional move. To pinpoint even more immediate trading opportunities and assess the very granular, real-time sentiment, let's now drill down to the 15-minute chart, focusing on today's intraday price action. On this ultra-short time frame, the price has settled into a visibly tight consolidation pattern following the more significant move observed on the hourly chart. This tight range and subdued movement unequivocally signal a period of market indecision, with bulls and bears currently in a stalemate. The current price is persistently attempting to maintain its position above the $114,500 level, which has emerged as an immediate, yet relatively fragile, short-term support zone. Crucially, if you examine the volume profile on this 15-minute chart, it appears noticeably lower during this consolidation compared to the preceding sharp movements. This lower volume during consolidation further underscores the lack of strong directional conviction from either side of the market at this precise moment. For agile short-term traders, a decisive and high-volume breakout above $115,000 on this 15-minute chart would serve as a powerful short-term bullish signal. Such an impulse could potentially propel Bitcoin swiftly towards that previously identified $115,800 to $116,000 resistance zone, offering a quick scalping opportunity. Conversely, a pronounced breakdown below $114,000, especially if accompanied by a noticeable uptick in selling volume, would likely trigger further downside momentum. This would send Bitcoin to test the more robust hourly chart supports at $113,800 and, critically, $112,000, invalidating the immediate bullish outlook. These very short-term microtrends often provide the earliest indications of a potential shift in momentum, but they inherently carry higher risk due to the increased probability of false breakouts or shakeouts. Therefore, it is paramount to demand clear confirmation from sustained volume and subsequent candle closes beyond these immediate levels before committing capital based solely on these fast-moving signals. Always prioritize risk management and await genuine conviction from the market before making your trading decisions on these smaller time frames. To synthesize our analysis and provide actionable insights, let's recap Bitcoin's critical price levels and potential future movements on the daily chart. The primary overhead resistance zone remains firmly established between $115,800 and $116,000, representing a significant hurdle for bulls to overcome. On the support side, meticulously watch the levels at $113,800, then $112,000, and finally, the long-term psychological and technical stronghold of $110,000. For an immediate bullish breakout scenario, surpassing $116,000 with conviction and robust volume, I'd currently assign a 60% likelihood. This bullish push is highly contingent upon the release of positive U.S. spot Bitcoin ETF net flow data for today, coupled with a broad increase in overall market risk appetite. This specific scenario would be further reinforced by overwhelming buying volume accompanying the breakout, signaling strong institutional and retail conviction. Conversely, a retest of the crucial $112,000 support level carries a substantial 40% likelihood. This bearish potential could materialize if the current consolidation around $114,000 fails to find footing and instead turns into a decisive breakdown, especially if macro concerns escalate. Increased and persistent negative ETF outflows would strongly reinforce this bearish short-term outlook, forcing price to seek lower support. For all your trading endeavors, Whether pursuing short-term gains or adjusting long-term positions, consistently confirm breakouts and breakdowns with significant, validating volume. Always look for clean rejections at resistance levels or clear bounces from support before initiating trades, as these patterns provide higher probability setups. Beyond the charts, pay extremely close attention to upcoming U.S. economic data releases, such as inflation reports or Fed statements, as these will heavily influence broader market sentiment. Most critically, continue to track the daily U.S. spot Bitcoin ETF flow reports, as these have become a primary, real-time indicator of institutional demand and will profoundly impact short-term price movements. Remember, in the incredibly dynamic world of cryptocurrency trading, effective risk management is not just important, it is absolutely paramount. Always set your stop losses prudently and define your take-profit targets clearly based on these identified key levels to protect your capital and lock in gains. Thank you for joining us today on Explain the Charts. We genuinely hope this in-depth analysis empowers you to make smarter, more confident trading decisions in the complex Bitcoin market. Don't forget to like, share, and subscribe to our channel for continuous, valuable market insights. Until next time, happy trading!